Hello everybody, in today's daily video I want to talk to you about the upcoming Bank of Japan rate hikes and their possible outcome on the S&P 500. I have prepared for you this chart. This is basically S&P 500 on daily, and with the yellow lines I have indicated for you that every single time over the past few years when the Bank of Japan rate hiked, which is going to happen this Friday, most likely on the 19th of December. That's this yellow line, this last one. Every single time after it hiked, actually, usually it still was going up a little bit for a few days, maybe on few days. Actually, no, there even wasn't in January 2025. And we had the first time we had 4.3% drop. After the second time, that was when the market was caught off guard the most. I feel like many people basically, were not prepared for this. When the Nikkei crashed, and that was August 2024, it was 6.8% drop from the day the rate hike was announced. And the last time it was still 3.2% drop, even though then we had, of course, the 20% crash, but that crash was not because of the Bank of Japan and the rate hikes, that was because of the tariffs. So in theory, basically, the correlation is there because due to the extremely low rates, interest rates in Japan, just so many people, so many market participants were borrowing yen in Japan for these favorable rates, and then basically buying for these yens Bitcoin and S&P 500. And if these rates gets worse, they can't afford these loans, they have to sell or take profits. So however, as this is the fourth rate hike, and I think the market should be impacted less and less on that because I think it's just getting used to it. That's also what makes sense to me. So again, I still do not think we should undertake the November low in the S&P 500. I do not believe this is going to be 10% correction in total. I still think it's going to be just like 5% correction at most. But as much as I would like this correction that we are in the S&P 500, let me move this. As much as I would have liked it to end this week, I have to say that based on this research, I didn't even realize it before I've done it, but based on this research, actually it can continue even the next week. So I would really lie if I would say that there is no chance for this 10% correction of the S&P 500. I would lie if I would say that there is no chance for that. That would be like this. And also, when you look at the S&P 500, there is again a big danger. This is what I'm nervous about as well. There is a big danger that we are actually making some kind of an M, which is extremely bearish pattern. Extremely bearish. It's the inverse W, right? So, however, regardless of how low this correction is going to go, whether it's going to be just few percent as I originally thought, or whether it's going to be 10%, which is to me the most bearish scenario, regardless of how low is it going to be, I still believe high conviction that this is a buy the dip opportunity, and we're gonna be back to the all-time highs in no time. And in Q1 we're going to even break the all-time highs and break the 7,000 S&P 500.